All right. Good morning, everyone. My name's Lisa Ham. I'm the president and owner of the Clyde Paul Insurance Agency here in Summit, New Jersey. And I am happy to be here to welcome everyone to the PIA New Jersey Deep Dive. Today's topic, the perfect E&O storm, tips to navigate the hard market. So really looking forward to our conversation today. And we're incredibly lucky to have wonderful panelists today to walk us through this topic. We have two insurance agents that specialize in coastal insurance here in New Jersey, where the hard market often hits quickly and extremely difficult for their agencies, as well as Christopher Weldon, an attorney that specializes in E&O claims. So let me introduce each of the panelists, and we will take it from there. So, Bill.
Rob, thank you, Lisa. Bill McMahon, McMahon Insurance Agency. Our main office is in Ocean City. We have branches in Cape May, right outside Ocean City, and more. And then we also have an office in Manahawkin. And it's myself and my four other siblings, five of us all together, running the agency, second generation family business. Rip.
Thanks, Bill, and thanks, Lisa. Good morning, everyone. I'm Rip Bush with Kieran Hire Insurance. We're in Point Pleasant Beach, New Jersey, often known as God's country to us. We're a smaller family-owned, operated business. Been there for, I think, close to 65 years now. So we've endured the good and the bad and the ugly, and happy to be here today. Oh, also served as president of PIA New Jersey. It was 5 years ago. So glad to be here with some friends, and Chris, on to you.
Thank you. Chris Weldon from Wingett Spatafor in Schwartzburg. I'm an attorney specializing in errors and omissions work for agents and brokers, also represent agents in M&A, producer agreements, everything from the ground up for agents and brokers relative to their business. Hopefully, we can try to avoid with these deep dives some potential E&O matters, and feel free. There's a hotline to the PIA if you have any of these matters come up while you're in your agency and want to discuss it. You've got a hotline you can reach out, and they can put you in touch with me to get some free advice from an attorney. Probably have never heard that before, but yes, we do give free advice once in a while. So look forward to speaking with all you guys today, and look forward to going to a deep dive on these issues.
All right. Well, thank you, Bill and Rip and Chris. We're looking forward to this conversation today as well. I do want it to be a conversation not only with our panelists, but with our attendees. So you should notice the chat on the side of our series here. So please, if you have any questions that are top of mind, Chris is an incredible resource, as is Bill and Rip. So please enter your questions, and we'd love to answer them throughout the course of the next hour. Also want to highlight before we get started that we chose today, October 29th, as the date for our deep dive series as how to navigate the E&O storm brought by the hard market, but because it's the 12-year anniversary of Hurricane Sandy as well. So I know I'm encouraged looking back 12 years ago at all of the things we had to endure to come out only more resilient as an agency channel, navigating Hurricane Sandy, and looking forward to the tips we're going to receive today to help us navigate the hard market we're in. All right. I think that's where we'll get started. So the market we're in has given us an incredible amount of volume of work, more work than we're used to going through our agencies. So I'm going to kick it over to Bill and kind of get your strategy as to deal with the volume of work going through your agency. How do you maintain the quality of work while getting to everything?
Thank you. One of the things, when we look at the statistics in our agency, I think we're a little bit overstaffed when you compare them to the national averages. Marshberry would be like, you need to add more people on here. You can handle more revenue, but it's important for us to retention. We look at retention, and when it comes to retention, that means looking at the accounts and reviewing them. So we'll overstaff there to make sure people have eyes on the on all the accounts. Now, the burnout piece, that's real tough right now in this market. We're actually going to have a speaker come into our office and talk to all our staff in November to help with the employees give them tips to talk about selling the increases. One of the burnout piece right now is all this, over and over again, a 20% increase, a 10% increase on every single book. Every call is, why did my insurance go up? Why did my insurance go up? And people wanting to cut the coverages. We are blessed with where we are, that their value of their house are going up too. So we can kind of laugh it off, but it's not always easy when people are calling, our inland clients are calling, they do not have the value of their houses going up like they are on the coast, where it's like, hey man, your insurance went up $500, but your house went up 300,000 over the last year. So, run with it. Inland is a little harder, but the burnout piece, we're going to have someone talk to them, and then we're trying to do events quarterly with the team to thank them, and just, we know you're in a tough spot right now. So that's how we're trying to deal with burnout. Are we being successful? At times, but then we also have, people retiring on us. So it's real tough.
There's practical, at our agency, from a practical standpoint, we've just tried to introduce what we call deep work days, where we rotate once every 2 weeks, where each employee gets a day to just focus on what they're trying to work on without interruptions. Because every day is a phone call with a client that you have to educate and then educate and educate. So it's all different strategies to try and navigate that.
Yeah, Lisa, we have our team has an hour every day of D&D, do not disturb. And that's the idea. Put that stuff that, when the phone's ringing, that's where a mistake can happen. So put your heavy lifting into that, either in the beginning of the morning, before the phones really get going, knock out some of the things that are tough. We had a person years ago tell us, eat your spinach when you get your dinner and the spinach is there. You got a steak and potato, eat the spinach first. So we tell the staff all the time, eat your spinach early in the morning, and then save your heavy things or things that you need to dive into for a while. Save that for your do not disturb time so that you don't make a mistake on it.
Yeah.
Bill, you've made a good point about, being overworked and also cutting coverages. Both times, and I've dealt with lawsuits over the years where that arises. Specifically, people cutting coverages is a big thing. Let's take off, the sewer, or let's increase my deductible to a point where they get themselves in trouble, or better yet, taking off collision coverage off the car. All these different things, lowering their limits, thinking they're going to save enough money. I try to tell every agent, this is a risk transfer. You're not transferring, the entire risk. You're transferring part of it, and people have to understand that. But at the same time, you want to make sure you have all your coverages in place, and you want to document very well when somebody starts wanting to cut coverage, and identify those coverages being cut and put it in writing, saying we understand that you want to cut these coverages. And we will, follow your direction. It's against our advice. You may want to put that in there, but to the extent you want to, advise them, if they just change their mind and want to bring it back in, you will, attempt to bring that coverage back in if they make a different decision. Strangely enough, a lot of people believe they can take the coverage off, and then a hurricane's coming in, and they think they can put it back on right before the hurricane. Not so fast. And a lot of guys and a lot of, insureds attempt to do that. So things you got to think about when they're taking it off. You got to tell them that, this coverage is available now. It may not be available if you decide to do it last minute before a storm is coming in, or, it may not be available next year, because you get a certain type of claim. So understand what you're doing. If you have it on your policy and you keep it on your policy, there's a better chance we're going to be able to renew it that way with that coverage.
Chris, that's a great point about the coverages that clients are trying to remove. And then I think we're also facing a lot of changes where we have tightening underwriting guidelines, and we're having to move clients either from carrier to carrier, or even going from the direct market to excess and surplus lines. So I was going to ask Rip here, as you're seeing the tightening markets and non-renewals coming in and even shifting to excess and surplus lines, how do you review the policies to make sure that when coverages have been removed or changed, that you can educate your clients?
That's a great question, and pretty much everything that those guys had said, and to reiterate some of your points, when this volume is coming at you, You know, and we're a smaller agency that's been around for a very long time. So for us, you know, we build up client relationships and it's about maintaining a big volume of business. You know, when Sandy hit our office, we were saddled with 3,500 flood claims in a matter of 48 hours and 4,500 wind claims shortly thereafter. So you talk about pressure under fire, you know, there's a lot we learned from that experience and things that we've carried forward. So when we see the hard market shifting into this type of, I guess, marketplace for us, you know, we're already juggling bowling balls. And then all of a sudden somebody throws a chainsaw into the mix, you know, you got to be really careful. So for us, we usually tend to have a lot of smaller conversations almost immediately as we're experiencing them. So if an example comes up where you're shifting from an admitted market carrier because they just decide to leave the state, or they've just dropped their whole book or something to that effect, now you have to go to an admitted market carrier because that's your own next step in line. You do have to make sure that not only you review the forms, but that you bring the most clarity that you can to your client and set their expectations as well. You know, going from admitted to excess and surplus is a big step, and that Lloyd's London, you know, phrase always catches people a little off guard, and they get a little scared, thinking that they're going into the worst of the worst. But they've been around a long time, and coverage and premiums can sometimes be pretty similar, but you do have to, you know, make sure you educate them on what changes are taking place and leave a lot of the decisions up to them. Educate.
I gotta jump in here with you, Rip. I think you make a good point. You present the coverages to the insured. We're not making recommendations. We're providing options for the insured to consider. And it's hard to get away from that, especially when we're going to talk about this later on in this deep dive. But what your duty of care is, you know, the idea is that your duty of care in New Jersey is a lot like a fiduciary. You've got to advise your clients a little bit about other coverages that they may want to purchase. And we try to tell everybody when they're looking at these things that you want to be doing this in whatever state you're in, New York, Connecticut, whatever state it may be. I'll let you a good example of how these states work. If you try the same case in New York, New Jersey, and Connecticut, in New York, you'll get it dismissed 90% of the time. In Connecticut, you'll get it dismissed maybe 50% of the time. In New Jersey, it's about 10% of the time because the standard of care goes up as you go into those other states. And New Jersey, you got to be ready for that. So what does that mean to you? You just need to be more attentive to what you're doing. You need to have that policy checklist out there and making sure you're offering all the coverages. When you're doing a homeowners, you're offering, you know, talking about, are they running a business out of their home? Are they, you know, do they have an umbrella? Do they have anything to schedule like jewelry or art? Things of all that needs to be put in. And are we doing replacement costs across the board, both for the home and for the personal property? A lot of people don't think about those, and we've got to make sure when you're going into surplus lines, is that surplus lines going to give you that replacement cost coverage, or are they going to look at it in ACV? And who's valuing the home? We were just talking before you guys got on today, and discussed, you know, what the cost is to rebuild a home. How are we going to run a cost estimator and get the true value of what a home is without understanding what the market is to actually rebuild it and what those numbers look like? So those are all things that come into play now that we're into a hardening market that you have to look at carefully and understand what you're presenting to your clients.
Chris, I think that's a really great point. If I could just add on to that for a second, I'm sure Bill would want to chime in as well. Replacement cost value on property coverage right now has never been more complex because we've had inflation kick in over the last couple of years, which has really changed the landscape of pricing, not for the better. And for our clients to really fully understand why they're getting such big rate increases, why they're seeing coverage increases, and why none of these things are really lining up to the way things have been in the last decade, perhaps more. We really have to use analogies. And, one of the things I say to clients all the time is, the insurance world is regulated. And it takes us a very long time, like a big steamship out in the ocean. We can't just turn on a dime the way a retail store can. Gas station can increase pricing overnight and week to week throughout the year. Our carriers might get one shot at it. So they have to use, backed up statistics and, pretty much convince the department that they need this rate increase. Look at our claims exposures. And then you use other analogies on costs. Replacement cost value is a tragic one for us. Bill, you had some pretty good commentary on that, so I'll let you take over.
Thanks, Rip. The replacement cost, we found the replacement cost inspections that the insurance companies were using, that we have the tools, our software, weren't keeping up with the pace of what was happening in our neighborhood. And one of the managers came to me, she's like, Bill, these things are off. So I started reaching out to one of my local builders. I like to call it Coastal Custom. They're building houses that, like, boom, we're going to go in there and buy them. But they are not a custom where things are coming from all over the world. And, these are pre-spec built, but they're built for the affluent client that wants to not build their own. And that number is $375. That's, nothing too fancy. That's nice cabinets. That's, higher than Home Depot, things like that, Lowe's, but it's all hardwood, some carpet in the bedrooms. So it's $375 a square foot, where the insurance companies still come back and it's at like $250, $275 a square foot. I'm like, where are you building that in New Jersey? Because I'm in Cape May County, and we're a little, we're not as expensive as North Jersey. So there's no way you can build something for $275 in New Jersey. You want to talk about an uncomfortable conversation with your client when they think, why did my premium go up? And then we got to tell them, hey, you need to increase your building by another $50,000 too. So let's add an additional $300 onto that. And then it's shocking, the staff will come back and be like, they thanked me for it. Yeah, because everyone's afraid to have that conversation with them, but they want these buildings insured the proper way. And then onto that, like, you're hearing supplies coming down. So quarterly, I'm sorry, I don't know if I said this or not. I reach out to my builder every quarter. Hey, where are we? Where are we? So right before I ran into him, there was something on the Wall Street Journal podcast I listened to, like, hey, building supplies are coming down. So I went to him, I said, hey, building supplies are coming down. He goes, yeah, but my labor costs are still shooting through the roof. So we're still at $375 a square foot in our area. So I like talking to the boots on the ground, because that they know better than a software.
I'll give you an example on a software issue that arose. I had an agent who insured a home out in on one of the lakes, and a storm came through. Actually, it was a fire, I should say. Took out the entire house. So they ran a cost estimator before the fire occurred to insure the house. That cost estimator asked some general questions, asked when the cabinets were built. They, dated back to 1950. However, they were top of the line oak cabinets, but never asked that type of question. So the cost estimator came out about $100,000 below the number. But that agent was placing it with that carrier. So when the fire came through and it was underinsured, the carrier said, we're not covering the replacement of those cabinets. And we said, you have to. We followed your cost estimator, did what you did, and you did what you're supposed to do. So they were trying to balk at covering the claim. Ultimately, we got the carrier to, cover the entire claim, including the cost of replacing those cabinets. Those cabinets being another $100,000 on the policy, and it was a guaranteed replacement cost. But only because we were using their cost estimator. If you're using cost estimators, you're going to the excess surplus lines, and you're using a third-party cost estimator, you could run into trouble if that cost estimator, like Bill said, is under that value. And in that case, you may want to go out to a certified building appraiser to get a cost of what it's going to cost to build that house from the ground up. The best approach is to follow the cost estimator the carriers give you, and to the extent You can't rely on them to do what Bill does and goes out to the market. If you're underinsured, somebody said, are you running into a risk when you overinsure something? I don't know that in this type of a market that you can overinsure. I don't know that that's possible at this point in time. It really is the numbers that you have to go for in order to make sure they're properly insured. And if you're overinsured, the carrier is probably going to let you know that anyways. Normally, I haven't seen a carrier in years come back with this is overinsured. We're not going to pay that kind of money. Normally it's underinsured, so it's very difficult to overinsure stuff.
So Chris, if I could just add on to that, there's actually statute out there in New Jersey that is a familiar practice when it comes to lending and insuring values. So banks and lenders, for example, can't force someone to overinsure a property simply based on their loan value. But one of the things that we always talk about, especially because Bill and I are stuck in the area where the hurricane's going to hit first, is what's that cost of a loss pre-storm and then after storm? And that could vary greatly. Having been through Sandy and seeing costs escalate as high as 25% within the first 6 weeks, you don't have the proper coverage and proper endorsements on the policy. That's a whole other issue on top of it. And especially these days when the coastline is getting cut off by the knees and carriers are leaving by the droves, if you have limited markets and they only have limited endorsements as to how much coverage they will pay over and above, that's a conversation you need to have with the client. One of our markets, which is an admitted market carrier, really doesn't have a very high ceiling of endorsement on coverage A afterwards. So we do explain that to our clients and say, well, this is the supposed cost to rebuild right now, and you do have 10% more, but here's a scenario I'd like to throw by you, and you tell me what you would like to do. Shifting over into the excess and surplus markets, sometimes they don't offer any of those extended coverages. So that is a conscious decision that your client would have to make in advance, as long as you explain it to them properly.
Got to make sure that, Rip, like you said, you got to make sure they understand the guaranteed replacement doesn't always mean guaranteed replacement. It could be a guaranteed replacement to 10% over, as you just said, over what you're insuring for, but that's not true in the markets that you're dealing with, especially on the coast.
Yeah, scary stuff.
Knowing your client and knowing their replacement cost is, extremely important. We said, Bill, up here in northern New Jersey, it can be almost up to $1,000 a square foot sometimes. So what's your client building and what is the carrier going to replace, right? So each client individually. What do you guys do with clients that are fighting you on the price and the replacement cost? I don't want to pay that. That's too much. My house isn't going to cost that much. How do you handle that situation? And how do you prioritize kind of communicating to them and educating them?
In our office, I'll run with that. In our office, if they're really kicking and screaming, we'll work with them. But if you're kicking and screaming saying, hey, I only want to insure to this, we might not be the right fit for you. Here's what we can offer you. Here's what our agency can offer, and this is where we are comfortable. And if they, I tell my staff, so my brother handles our claims. So when there's an issue, my brother comes to me. So my staff knows that, like, hey, this person is raising all kinds of cane and giving me this every year. When they have a claim, they're going to give my brother a problem, and it's going to be back in my desk. So if they aren't happy with what we're offering and how we're comfortable insuring them, I'm probably going to get Chris upset about how we're doing this, but it's like, hey, maybe you go out and check with another agent and see what they're going to want to offer you. But
I'm absolutely not upset with that at all. In fact, I try to tell agents, even though you serve the public in offering these policies, you are not a public entity. You do not have to insure everybody that walks through the door. You have to realize you need to tell them these are the markets we have. These are what our limitations are. I have some agencies that will not, go below a certain limit relative to liability. If you're not willing to put this amount of liability on your house and not buy an umbrella, we're not going to insure you. You're going to want to find another broker. We just don't do that. There's a bunch of them out there, but that's not something we do. So I'm pleased to hear you're doing that, Bill, and offering the opportunity for these people to walk away when it really doesn't make sense because they're really just trying to cut to the bottom number. That bottom number is just going to get you in trouble. When I say get you in trouble, I'm talking about the agency, because they're looking to cut stuff off, in an attempt to save money, and not realizing that in doing so, it may end up being their pocket they have to pay out of.
And I'm
Yeah,
a
Bill.
big proponent real quick of, I tell the staff all the time too, is like, hey, we got a goal for the year. If we hit 90% of that goal with quality business, I don't want 110% with a bunch of questionable stuff. That's just going to lead, that's weeds in our garden that we're going to have to pick out later, and are going to have conversations with us, having conversations with Chris or another attorney. So 90% is much better than 110 if we're writing really good stuff all day long.
100%. And as independent agents, right, I represent 25 plus carriers. We pride ourselves on being able to move people to find the most competitive option that has the best coverage. But in this market, moving around with the way the underwriting guidelines are shrinking, and what is the age of your roof, how all the things that are coming up, is really difficult. So education is definitely the key for all of us. Chris, any other thoughts on how we should document this to our clients as we're talking to them about, their replacement cost, on changes to their policy, on moving from excess direct market to excess and surplus lines?
Where you're doing that, you've got to document what they're losing. I mean, I'm always cringing when I hear agents are going to replace apples for apples. There is no such thing. Every carrier has a different nuance on their policy. And when you go from a standard market, obviously, to a surplus lines, there's changes in those policies. There's different exclusions that apply. There's none that exist. I actually suggest to agents, when you're doing, on a homeowner's basis, using the Accord 80 form, which I think really does a good checklist of everything that you potentially want to, look at for somebody on the personal line side. And then going to Accord 25, in regards to the commercial policy, which offers all the various other forms that you may want to consider. So both of those, Accord 125, both of those forms do a good job at doing a checklist for you as to what coverages you want to offer to your insureds when they come in the door. And some of the times, people will go through these forms and they'll leave blanks. And I've been in too many lawsuits where everybody discusses, why did you leave that blank? Well, they didn't want it. No, they didn't ask me about it. A classic one was, I had a therapist who ran a business out of her home, and she didn't. It was a blank on the question form. Somebody had slipped and fell on the sidewalk, and they sued, and the homeowner carrier said, we're not covering. We didn't know she was running a business out of her home, and therefore there's no coverage for this loss. So lo and behold, we get the E&O lawsuit in, and they're suing the agent because the agent left that section empty, because in their mind they weren't taking it. Even though it doesn't give you a place to put declined, I would still write it in the amount declined. If you look at the Accord form, there's on business out of home business, you can write decline in the box next to it. So if they're not taking that coverage, I would write decline and then have them sign it. I'm dealing with a case right now out in Oregon where the guy is telling us he didn't know of a roofing exclusion that existed on his house. And I got signed documents and emails all over the place. And they're still suing. I mean, it's amazing to me that they're willing to do it. So even when you do it all right, you still sometimes have to fight the battle. But the documentation makes it easier. We're hoping to file an early motion to dismiss in that case and get out, because we've got clear documentation that shows that they knew that they didn't have roof coverage. The carrier wanted to inspect it and reserve the right to exclude even after inspection. So those things do exist out there, and you've got to make sure you document it and document it well. When you do things on the cuff, and I think we'll talk about this a little bit later on, at a fast pace, sometimes you miss some of this stuff. And the idea is to avoid missing it, is to make sure you follow consistency in your agency, that everybody's doing it the same way and everybody's using the same forms to get the same answers one way or the other to avoid that potential E&O claim.
That's a great segue into, all right, so we've 12 years ago was Hurricane Sandy, and in between then, we also had COVID, obviously, and now we have remote work, which is the way of many agencies, whether it's 1 day, 2 days, remote work is here. So how do you ensure remote employees maintain their quality of standards when they're working at home versus in the office? How do you make sure that they're still learning? Because there's so much that used to happen in the office that now is a little bit different and still needs to occur so that our agencies can operate consistently and have that same E&O protection. So I know, Chris, you're publishing an article on this exact topic for the PIA coming up. So what are your thoughts on how we can safeguard our agencies with remote employees still in the mix?
I think you're going to see in the article, and I'll give you sort of a cursory preview of that article. The idea is to stay engaged. I mean, Bill talks about being engaged, and Rip too, in their office and Lisa with their employees on many different levels. Having that weekly meeting, I suggest still having people come into the office. I think it's so important to get face-to-face time with people in the office and have discussions about what's going on in the market, how things are being handled. But at the very least, having those telephone conversations, Teams meetings, Zoom meetings like this, to be able to talk about the issues that may exist, that they're facing. When you're not talking on a regular basis, people start getting, and you start seeing inconsistency. And over my career of representing agents in E&O matters, one of the favorite things to do, and I hate to tell you, in my early days, I actually sued agents. And the thing that I used to look for was having inconsistencies in the agency and take that agent in the other department that's doing a phenomenal job and use him sort of as my expert against the agent who inconsistently did something and caused the E&O loss. So the consistency of doing a good job in your agency and talking about that and promoting it among your employees is going to take you a long way with the remote work. Also making sure that your employees have a safe place to work in their home and they're doing the right things and have the right equipment to do the job. A lot of those things people just overlook, and you'll see all this in the article that's coming out in November.
Bill and Rip, anything regarding the process and procedures you guys have in your agency that, whether it's virtual or in-house, that keep it consistent for you?
So we're all local in our business. There's no one really remote. I mean, there's the off day where, you could be out and you're doing, some light work from home or something to that effect. But we're pretty much an agency focused business. I think 4 weeks after COVID, 5 weeks, 6 weeks, something like that, we were pretty much all back at our desks and back working. It's a smaller family agency, so we're pretty tight that way. And I think once we all cleared the COVID hurdle, everybody was pretty comfortable with it. Doesn't stop us from getting out once in a while or needing to take that time, but majority of our work's there.
So we have some longtime employees that have retired out of New Jersey that still work. So we have them. When we've had to, after COVID, hire some fully remote employees. The newer employees, the manager's got to, wants to touch base with them once a week to make sure they're, feel part of the team, and then we just gotta we check the work. The other thing is we have that's been a nice successful tool in the office for years and years, and the staff hates it. It's called the 515 report. My dad had read about it years ago. And the idea is the staff member has to give you, or everyone in the office has to put what good happened this week, what bad disappointments happened this week, and anything that, you can fix them or any suggestions. It takes 15 minutes for them to fill out and 5 minutes for the managers to read. And it goes all the way up the chain. So I can hear about Chris, you were talking about the guy who wants to decrease his liability. So last week we had a guy, now this is all across the street from the beach. We have 2-unit condos, commercial building. We have $1 million liability on these things, and he's hell bent going to the manager of the condominium department after he went through our account manager. He only needs $100,000 on that building because he's got an umbrella policy. Now, this is a building that's in a commercial name in the condominium association's name, but he only needs it because he's got an umbrella policy. No, you don't, buddy. And that's like, it came in my report and I just wrote back to him, nope. And this is exactly right. You got to tell him this is a condominium association. You are not, this is not your personal umbrella. And this is an educated guy. I mean, he's got probably a $1.5 to $2 million asset here. But I've got an umbrella, so I don't need it anymore. Yes, you do. But it quickly filters up so you can see where things are bubbling up in your organization, and you and your management team can quickly address them before they're issues.
I love that report. And thankfully, our agencies run smoothly day in and day out. So that report can grab any questions that are permeating different areas, and you can take care of it very quickly. So, that's a great report.
The interesting thing about what Rip said about coming back to work after COVID, for whatever reason, insurance agents, lawyers, and that type of field were allowed to come back and work and drive and go work in their offices. Nobody else, but insurance agents were allowed to go back to work.
We were on the list. We're what we were called. We were very
the exception.
Yes.
Necessary evil.
Yeah. No. So all of this, the talk of working virtually, though, has also led us to technology that we utilize while working virtually. So Teams and different other areas, but where it's going in terms of artificial intelligence and other tools that we can utilize to help us to support not having E&O claims. But with that being said, there's pros and cons to these tools. So I know, and we've had conversations about voice over IP phones now integrating artificial intelligence to listen to the phone calls of our team members, and they can actually tell you the mood of the team member and the client's phone call and tag it, or potentially policy checking to be able to say, okay, there's tools that are out there that will check your policy versus what was issued versus what was requested. So I'm going to kick this over to Chris. What are you seeing in the industry as to tools that agencies are using and the pros and cons of working with them, and any words of advice as we head in this direction?
I see a lot of AI policy checking forms out there. I actually see people actually just throwing two policies into AI themselves, ChatGPT, and asking it to do a comparison. It's okay, and the policy checking companies are doing a great job out there. But I had claims on policy checking where it doesn't pick something up. You can't be 100% sure it's going to get everything. So you need to check from time to time that it's doing the right thing, making sure that it's checking the policies. If it's a good company that you're going to that's doing policy checking, they're doing this same sort of checking of their own work on a regular basis. In the case that I had, it missed the fact that there was a wind exclusion that was removed from the policy, which is one that, for whatever reason, gets removed very easily and not picked up well. I've had 4 of those cases over the last 20 years, and it's always somebody missed it. The other 2 were just, as we talked about earlier, that they were done last minute, and they just missed the fact that wind was removed from the policy and wasn't covered. In this policy checking one, it wasn't covered. There was a roof issue, and we, the company that I represented, the third party vendor, came up and stood up and said, we're going to back up the agent. We're not going to hold the agent responsible. We'll take care of it. And we went out and investigated the claim. Come to find out, they were really just trying to get a new roof. There was some damage to the roof, but it wasn't as bad as they were making it out to be. And once we put an investigator out and did the regular claim stuff, we found out it was a very minor claim, if a claim at all. But you've got to be careful. I'm not suggesting you don't use these third-party vendors. I think if you get the right ones that are qualified and have experience and have understand who their client base is, you can get good ones that are doing a great job. I don't know if you recall back in the years of when they used to file, based on date, in trying to find documents, things would get missed policy checking was out the window then, even though they were trying to policy check everything. Very important. At the very least, every agent should from time to time be looking at the forms that are attached to the policies that they're selling. It's amazing to me how many agents don't realize what forms are actually on their policies, what exclusions are actually on their policies, and don't recognize when something's changed from year to year because they hadn't been looking at the previous year. So you don't have to look at every policy, but looking at one policy every year that you're dealing with, understanding what the changes are important so that you can have those discussions with your client and potentially buy back coverage if it's there, it's available. There's a lot of different ways to go about protecting yourself in that regard.
Nothing in isolation. I agree. All these tools are amazing, but none of them in isolation. Just, use it and rely. You have to check on it. I think Bill and Rip, we're looking at the volume of work that's coming through all of our works and all of our agencies and trying to find solutions to just continue to keep up with the quality. So we have the software. There's also the idea of utilizing outsourcing to go down that road. Chris, is there anything that you've seen in terms of the outsourcing world that you would advise on?
I'm a little concerned about the outsourcing. I mean, I know there are a lot of good back end companies that are actually doing back end work, and that's what they're offering. I am seeing some companies come in and attempting to take over the back end and then eventually take over the agency without buying it. And they're out there, and you have to be careful about who you're basically contracting with to do the back end work, and understand what these companies' ulterior motives are. Not all back end companies are looking to do back end work. They're looking to purchase agencies in a very inexpensive way, and that's taking over your accounts and talking about purchasing them. We're doing all this work now. We can buy it at this, rather than what the numbers are. And agencies, I'm doing probably 7 M&A deals toward the end of this year, and those numbers are still pretty high on the agencies. Not that you guys should go out and sell your agencies or anything. We want you to keep your agencies, but those numbers are still pretty high. They haven't dwindled like I thought they were going to do, and even with the inflation there and the borrowing rates going high, they're still hitting big numbers. There's a lot of money in the market.
Chris, we're a smaller agency, and this is stuff that we look at. And I think like any other agency, small, medium-sized agency, you're seeing all these tools that are now kind of coming available, and you want to see somebody else dip their toe in the water first so you can kind of learn from their mistakes. That's generally what we do. And after, being around the block a few years, you kind of figure those things out. One of our bigger concerns, and I don't know if you've seen this yet, is there any risk of data loss, any kind of data leaks, cyber issues that you'd have on those third party?
Absolutely. And you want to be looking at those contracts to make sure that they've got the right coverages in place for cyber, and that they're doing the right filings, because some states require them to file, and knowing if they're making those filings with the companies. For example, with New York, you've got to do these filings with the cyber and filing with the DFS. And some of these back end companies aren't doing the filings, even though their people are licensed and handling accounts. If they're not doing that kind of stuff, you've got to question what their motives are, and are they meeting their obligations, and are they going to meet the obligations for you? I think what you've said, Rip, is to let other people dip in the water first, talk about it, look at what that contract looks and what it says, understand what that contract's offering, and have somebody who sees these contracts on a regular basis read them over with you and raise some questions for you to ask and discuss with the vendor.
So one of the things I took out of when preparing for this last week of the deep dive, my builders will come to me and be like, hey, the attorney is asking to remove this. Can I get this removed from my contract? And it's like, talk to your attorney. No, push back on them. I want this added, push back. Talking to Chris, he's like, hey, I haven't been doing, I've been reading my own contracts with with vendors. Moving forward, I'm going to have the attorney review them and be like, hey, push back, make sure we're named as an additional insured. Because one of the things that I've noticed are a lot of people just sign stuff. Hey, it's a DocuSign. Boom, they'll just sign it. So let's push, their attorney, this is a document that their attorney drew up to make sure they are completely protected. They want to work with you, the customer, push back and get some of the, information that is harmless. There was an insurance company years ago that said, hey, if we have a cyber attack, if we have a cyber leak, it's, sorry, but if you have a cyber leak and we are affected, we're coming after you. And that's how their contract, right? And I was fighting with the insurance company for like 6 months. And finally, I had to it's the almighty insurance company. They wouldn't budge, so I had to sign it. But with some of these vendors, Chris is saying, yeah, they'll work with you to remove some document information. So, get an attorney like Chris and on these vendors and make sure, you're not taking on all the liability, especially on like a cyber incident.
I think the tools that are available to us and the software and technology, I think it levels the playing field from the biggest agencies to the smallest. It gives us the ability to compete and really focus on the individual client, make sure that their insurance is accurate, make sure that we're able to refer them recommendations that they can choose from. But knowing that we can navigate the contracts with Chris or with the PIA, it has some great resources where we can refer contracts for their review. Is really helpful so that we know that we can protect ourselves as well. We're kind of winding down at 11:50 here. Chris, as you have all the agents here and you say, okay, we're all New Jersey-based agents for the most part. You touched on the duty of care. Here in New Jersey, what would you suggest we do to navigate the duty of care that's different than in other states?
I think we started off the presentation with sort of talking about that, and you've got a higher duty in the state of New Jersey, and it's a fiduciary duty. And to that extent, I think it's important that there's more discussions about documenting things well, and making sure that you have sign-offs from your insureds on a more regular basis to show what they've accepted and what they've declined. And getting that I think is the key to avoiding the potential exposure with your insureds when the loss occurs and they don't have the coverage. The backup sewer, and they say, well, I asked for that, and your answer is, well, no, here's the application, and you didn't ask for it. In fact, you declined it. You told us you didn't have a business, and when in fact you did. Those things documented well. Potentially avoid the potential exposure that you're looking to face. I had a case in New Jersey where a woman insured a catering business out of New York. Catering business, insured it in New York, and it was running a catering job out in New Jersey. Horrible accident. The catering truck came across the center lane, collided with head on with another car. The woman in the other car lost her leg. They sued the agent because the limits are too low and they're going to lose their business. So the catering business sued the agent, said you gotta come in and help us. We want your $1 million policy on this claim as well. And she said, well, I talked to them about that they wouldn't have coverage in other states driving these rental cars, and I told them what we needed to do, and they wouldn't take it. I'm like, and did you document it anywhere? No. So there was absolutely no way, even though it was a New York agent, and we attempted to move the case over to New York, the New Jersey courts wouldn't. We had to stay in that case and ultimately had to pay because we just didn't have the documentation to back up the fact that they had that discussion and they decided they didn't want that coverage. These are all things you have to think about, and the best way to avoid that is just to document it well, where they decline and when they decline those coverages.
One of the things you mentioned in one of our pre-calls was that document that even just utilizing our systems to send quarterly newsletters, to send email blasts, that And again, I know we deal with the volume of clients we're dealing with today is more than ever before on a repetitive basis, questions on every part of their policy. But knowing that we can use our technology to perhaps just communicate some generalities helps as well. Is that true?
Absolutely. So there was a situation where an ATV was supposed to be was added to a family's vehicles at home, or one of their things that they want, and the agency was sent out every year. What's changed? Did you have any ATVs? Did you add any jewelry? Did you add, and sent out these yearly questionnaires? They never sent it back. And lo and behold, when the claim came in, they sued the agent. We got out on a motion to dismiss because we had the documentation to show that we sent it out each and every year. There were times they would fill it out when they felt appropriate, and there was times they didn't, which was the year they added the ATV. And the court said, well, when the agent's not responsible, you didn't contact them, and he didn't even tell them when they sent you the form to tell of any changes in your policy. So yes, those using your computers to do these routine yearly send outs of questionnaires are good, or newsletters about here's what's going on in the coverages you should think about for your consideration. When you send those out, though, you got to make sure when you come back to that customer on the renewal that you're actually following up your newsletter and offering those coverages, in the same vein.
Thank you. Rip, Bill, is there anything that you want to finish with here as to either on the coastal front or process and procedure, or what you leave us with, your thoughts?
I think we're all under such scrutiny these days, with hard market conditions. I started this business 30 years ago, and my understanding is last hard market cycle was right before then. So while I came in on the tail end of it, seeing what it is right now, everything is time related, and everything is really high pressure cooker situations for yourself. So it is a little daunting for sure. It's nice to know that Chris is there and available for us, that PIA is there and available for us to utilize all their resources. So I would probably conclude in saying, if in doubt, reach out. I think I get paid for that slogan now, right? I think that's probably the best course. If you're not sure, reach out, find out.
Yeah, reach out to PIA if you've got a question about any of these things. PIA is there to help, and they've got a great resource within the association to answer some of these questions and to help you think them through. You join the PIA for a reason. Utilize them, use the benefit of what they can offer to get through some of these things and how to get through some of these things.
In the chat, there are some references to the resource center at PIA. So you can email contracts to irc@pia.org, and that will get you a contract review that is just a wonderful benefit of working with the PIA. And Brad Latchett, who is off camera right now, but he's our PIA New Jersey Director of Government and Industry Affairs. He's an incredible resource for all of us when we have questions on the legalities of working with a client or a carrier. Bill?
But you know what? My closing comments would be when it comes to staff, I always tell my team, ask questions. Don't be afraid to ask questions. We got a new hire. We all talk together. You don't remember everything. One of the things my dad always said, he always loved this industry because there was always something new to learn. And one of the things that we've, running the business now that I'm leery of are the know-it-alls. I really don't want you in my office because the know-it-all is going to lead me to a claim. The guy, the young producer is like, whatever, 30-year-old producer. 30-year producer. I know everything, blah, blah. Yeah, you don't know anything, and you're going to be a mess for me. So we're happy to let them walk out the door. And again, it's a team effort. Don't be afraid to ask questions.
My former partner had a great story about a guy who was in the business for 40 years. And a young whippersnapper who came into the business behind him, and the young whippersnapper was a document guy and listed all the coverages that he always reviewed with his customers as he was going out on the new business. And my old business partner used to ask the question of the seasoned guy, why don't you have a checklist? Because I know all those coverages. And so he held the sheet of paper up and he said, go ahead, give me the list of all the coverages you should offer on this particular type of risk. He went through them. He got about 60% of them, but there was 40% missing. So it's amazing how many you miss just not thinking about it. So it's important to sometimes these young whippersnappers can give some advice that we need to look at. The young guys do things and you should open your ears and listen to what those guys are saying because they've got a lot of good advice.
What I take away, whether they're experienced, new to the game, whether it's your virtual assistant, whether using technology, process, procedure, documentation. That's what I take away from it. Across the board, consistently, no matter which way you're going.
Exactly.
Well, that went quick, that hour. Thank you, everyone. Thank you to our panelists for joining. It's been really incredible to get to know Christopher over the course of preparing for these deep dives. What a resource. Always, Rip and Bill, look to you guys for all of the commercial and coastal knowledge that you share with us. And the hard market is really something you guys deal with these changes all the time. So thank you for sharing it with the rest of us that are catching up. And also, thank you to Brad. Again, he's been behind the scenes helping with this deep dive. And also Aaron Levine, our Vice President of PIA and in the business issues and agency operations committee. So thank you for that, Aaron. And thank you to attendees for attending. Everyone that's on this deep dive will get a link to the video. So if you want to share it with your team or other people in the industry, please do. And if you found this helpful and aren't involved in the PIA, please reach out. If you're interested in making this part of your agency's evolution, we would love for you to be part of the PIA as well. So thank you, everybody, for your time today.
Thanks, Lisa.